Market commentary for Tuesday, the 4th of February 2020. First of all, my apologies for the lack of commentary yesterday. It's a minor technical issue here, but back on board today, and it's more of the same. Friday saw equity markets plunge on coronavirus fears, with yesterday seeing somewhat of a pullback for FX and commodities. It was a case of follow equities with yen crosses and gold heading in opposite directions. Tuesday would begin with the World Health Organization declaring that the coronavirus is not a pandemic, which for now has calmed market nerves. The result would be a global rally in stocks, which saw even Chinese stocks in the green. Europe would follow suit, with the DAX closing up 1.8%, and US equity futures suggesting similar gains were to be made in the US. The early focus for FX would be the Reserve Bank of Australia interest rate decision. Many had pondered if a rate cut would now be on the cards after the terrible wildfires across the nation and the potential drag on the economy. Also to be kept in mind, China is by far and away the largest trading partner for Australia, and the ongoing crisis there could potentially have negative connotations for the Australian economy. All things considered, the RBA decided to keep rates unchanged, which saw Aussie immediately jump from 66.85 up towards 67.30. And then on to a high of 67.39 during the US session. For yen crosses, the equity market rally would mean a push north, taking dollar yen 108.55 up to 109.54, and euro yen finally breaking its recent 60-point range to rally to 120.98. Euro dollar would be the quietest of the major currencies, drifting down to a low of 110.33 from 110.64 before closing mid-range around 110.45. Sterling continued its roller coaster ride, as it loves to do, initially dropping down to a low of 129.42 before better than expected construction PMI data saw a squeeze up to 130.46. Gold would be the big loser on the day, dropping from 15.79 to a low of 15.49. Wall Street will follow on from Europe, with the Dow Jones up 500 points at one point, although will close up just over 400 points. The S&P and NASDAQ would register even more impressive percentage gains, with the latter up 2.1% on the day. Once again, all appears well with the world, for today at least. On occasion, I like to revisit previous charts, whether right or wrong, and given the only suggestion I usually make is it's up to you how to play it, I can be neither right nor wrong. Today, gold suffered some significant losses as equity markets rallied around the world. The hourly chart I threw up a few sessions ago was showing a decent uptrend with at least 3 sharp dips touching the line but going no further. You can see here the beginning of the trend off this 15.35 line. We see a touch here 1, a touch here 2, and a touch here 3, all getting a good bounce. Now, of course, today happened and it collapses like a knife through butter through that line on a break of around about 15.66. As I said, down to an initial of 15.49. Hindsight is a beautiful thing, but looking at the setup, it does allow us to have a think about how best we could have traded against that support line, not only above it, but also on the break of it. In the bigger picture, major support still lies just above 15.35, as you can see from this line there, and that doesn't change. But the uptrend we had there is well and truly over, at least for now. With that, I wish you all a good day. Hope you had a successful trading start to the week. I look forward to speaking to you tomorrow. Cheers.